Welcome to the Rideshare Guy podcast, where you will learn about the rideshare and mobility industry straight from Harry Campbell, who's got over 5 years experience covering the industry and has talked to thousands of drivers. There's no better place to stay up to date, entertained, and educated. So let's dive in.
So Ed Walker is a national practice leader of micromobility and shared economy for USI Insurance Services and is considered a top knowledge expert for property and casualty consulting and insurance placement services within his field. With 12 years of insurance experience and an underwriting resume of custom insurance, product creation for unique exposures, Ed has founded his practice group at USI in early 2018 with one goal: easing the burden of insurance for new and evolving mobility risk. In just a few years, Edward has constructed cost-efficient programs for dozens of regional mobility operators and eventually earned the opportunity to place insurance for some of the largest shared service operators in the world. So I think that's the long way of saying he is the guy to talk to when it comes to all things shared fleet insurance. And today we're going to be talking a lot about insurance in the context of fleet owners. So Ed, how are you doing today?
Doing wonderful, Harry. Thanks for having me back. It's good to see you.
Yeah, I appreciate you coming back. And actually, now that I think about it, you have been on the podcast before. I'm pulling the episode up right now. It was August 6th, 2020. Do you remember what we talked about? This is your first quiz.
Yeah, I mean, we went through a little bit of the current state of affairs of the shared economy vertical. A little bit about what my department handles, some unique accounts we focused on in the past, and kind of just some evolving trends going towards the future, and a few little questions here and there, just detailing, bits and pieces of the practice group.
Yeah, perfect. And that episode is 139. We'll leave a link in the show notes if folks want to go. I think I really like that first episode we did. It was sort of a little bit more of an overview, because I think one thing I will say is that, I never realized 7 years ago when I started my site that I would know so much about insurance 7 years later. It really is an important part, but I think it's also important because it can be so costly. Why do you think that is? Well, why do you think so many people, have issues or problems or, think about insurance on a daily basis?
Well, it's an interesting facet of this industry, because what you have is, especially with startup operators, is you'll have a legal team that's used to the technology side of the business, and they're used to maybe even starting a company. However, they've never put themselves in a situation where they're directly handling a very volatile line of insurance that has lots of claims, lots of spotlight, and not to mention a lot of regulatory influence. So not only are you on the front page of the newspaper for an accident potentially, but right next to that is another article about the changing and evolving regulatory environment that you're operating within. So it's a very learn fast culture, and especially with the insurance, you get a lot of people who have maybe touched on it before, but have never quite been this involved in something so volatile.
Yeah. I like the way you put it. It's new. There are a lot of accidents and there is a lot of potential liability. And I know that you and I, there's sort of a lot we could talk about in this episode, but I think you and I, we wanted to focus on the fleet owner side of things, because you and I specifically, we've been doing a bunch of work helping out fleet owners. I get fleet owners coming to me all the time with these various issues. And to be honest, almost always resolve around insurance. All these fleet owners, they never come to me saying, hey, we need help getting drivers. That's actually the easy part, relatively easy part when it comes to running a fleet, but it's often the insurance. How do I, prevent these drivers from getting into accidents? How do I get the best drivers? How do I train them? And things of that nature. So before we dive in, when I say fleet owner, for those who have no idea what the heck I'm talking about, what's the definition of a fleet owner in your mind?
So it could be a pretty broad topic. Really, it could either be a dealership group looking to use a little bit of their inventory that they're not moving. It could be a small grouping of maybe 50 vehicles that needs to be repurposed or would like to be more involved in a delivery network company or delivery business. Really, any fleet owner is just someone looking to use an inventory of vehicles in a more efficient and scalable way. Whether that's deliveries, whether that's renting them out on short-term leases, or whether that's renting them out to drivers to be Uber and Lyft drivers. There's the beauty of this world now is there's anything you can do with your fleet. It just comes down to what makes the most sense for you culturally, and what we can do on the insurance side to make that happen.
Yeah, and I think for sure, majority of my experience with fleet owners, I think, like you mentioned, right, there are folks running a fleet of cars who are renting their vehicles out to Uber and Lyft drivers. So that's sort of one subcategory in the fleet owner space. There's also folks now renting vehicles to delivery couriers, and of course, there's a bunch of crossover there. But there's also, new companies renting e-bikes, right? For example, I think we just launched a marketplace for couriers, and we featured a company called Zumo, Zoomo, and they're renting and or selling or leasing kind of a little bit of everything via e-bikes to couriers. So I guess, it's not just cars, right?
Of course not. And that's the beauty of a company like Zumo's, the gig economy in and of itself enables a lot of companies to find a lot of multiple uses for their fleets, for their scooters, for their cars. And it's really just about the implementation that really differentiates everyone. It's getting smart with what your fleet is doing. You mentioned Zumo, they're selling some of them, they're renting some of them. It's staying smart, diversifying that offering like that is as well as you could do it is the only smart thing to do at this time.
Yeah. And I think that's what's so interesting about the fleet owner model is that, I think a lot of people understand there are companies that rent vehicles to Uber and Lyft drivers, rent vehicles to couriers. But there's sort of a number, actually, I feel like my podcast listeners are going to be like, Harry, yeah, we know what you're talking about, because I've interviewed a bunch of these fleet owners over the years. In episode 156, I had Nick Williams from Sally that runs a big fleet of vehicles in New York, Chicago, and LA, renting to Uber and Lyft drivers. I've also had, I won't detail everyone I've had, but, even going back to one of my first episodes, I'm not going to remember the number, but I had a guy, Zach, oh my gosh, Zach's going to get mad at me because I'm forgetting his last name, but he was renting out vehicles on Flight Car, and, like Turo. And, he had his own little set of vehicles, and he wasn't renting them to gig economy workers, but he was just renting them to, everyday people on these sharing economy car sites, right? And really all of these folks, have fleets of vehicles, and they have, they might have different insurance requirements from small to big, but they all have a lot of similar issues, right?
Similar issues and a lot of great new ideas. I mentioned it before, it's one of the beauties of having an inventory like this, whether it's scooters or cars, is there's so many different applications at this point in time, whether it's an on-demand service or a B2B service partnering with another company. There are multiple avenues and directions you can take, your unused or used in inventory to really, drive top down efficiency with your margins and really, grow your business.
Yeah. So let's start with an easy one. Let's say I'm running a fleet of vehicles. I'm renting them out to Uber and Lyft drivers. This model's pretty common. How much does commercial insurance cost for, your average for-hire vehicle?
Well, it's an interesting aspect of the industry. Traditionally, whereas I like to, I mentioned this actually in our last talk, Harry, but one of the ways I like to lay that out, kind of when we talk pricing, I like to lay it out in a per car per month, more or less standard, not because I believe that's the best way to go with this. In fact, I believe quite the opposite. The reason I mention that is because it's kind of the status quo in the industry to speak about pricing with insurance for vehicles on that, with those kind of descriptives. So I'm going to keep to that. But I would say generally, what you usually have is a very fragmented industry. You have certain carriers that will quote something for $6,000 per car per year. And to them, they will say that that's very competitive. However, the more industry average I'd like to say at this point in time is probably closer to $1,500 to $2,000 per car per year on if we're talking about an individual car per year. And so, when you look at those two, the reason I bring it up is, any different carrier might give you a different narrative. And the reason behind that narrative is, it could be one of many things, but mostly it's experience in the space. And so, and sometimes experience in the space can be too much experience in the space, and they're a little bit jaded and they charge a little bit more because they've been around for too many claims years. So it's really a balancing act. But when it comes down to it, the rates and the annual premiums don't typically boil down again to per car per year. It usually is a more customizable rate that really goes hand in hand with the telematics that the operator itself is willing to provide to the insurance company. But in general, I would say, with a standard fleet operator, lending your vehicles out or repurposing them for a gig economy operation is generally going to run you anywhere between $1,500 and $2,000 per vehicle per year. Whether or not that's including physical damage is another conversation, but for the general state compliant needs, that's generally what you'll be looking at as a rough benchmark.
Interesting. Yeah, I will say it's not as expensive as I thought it would be. I mean, if you kind of compare it to, your average driver paying Geico or Progressive or whatever for personal insurance, I mean, it's often in the same range, right? $100. Sometimes, if you got kind of an expensive policy, it might be closer to $200 a month, right? So it's not a ton more.
No, it's not. And a lot of the reason for that is actually you brought up a good little kind of sub point here because you'll find that Nationwide and Progressive
Mhm.
and even Allstate, they have their own little shared economy programs that they pitch and they put out there, and even State Farm. You can go there, and if you got a fleet of 5-6 cars you'd like to
Yeah.
start your own TNC with, they're going to be, of course, tell you they can support your business, but they're going to be giving you prices at a very a la carte range. And what I
Mhm.
mean by that is you're not really taking advantage of your size or scale at all. And with 5-6 cars, you don't have much size and scale, so you don't have much of an option there. But looking back on some prior clients of mine before they had some significant growth, a lot of times, unfortunately, the entrance cost can be a little bit higher than the
Yeah.
1,500, 2,000 per
Mhm.
car per year I mentioned, because a lot of these carriers that I mentioned that more or less are just writing kind of a bigger personal lines policy for a business with maybe a few rideshare endorsement add-ons.
Mhm.
Again, they're giving you their a la carte pricing, so you're paying per vehicle, and you're not really getting any of the benefit of putting any of those other vehicles with them. You might get some sort of multi-car discount, but that can
Got
only
it.
go so far. And when you compare that to a fleet of 50 or 100 vehicles that are putting thousands of miles on the road per month, the scalability and the economies of scale of that kind of size really brings that cost down,
Yeah.
believe it or not, per car. And that really ultimately comes down to the benefit of the operation or the insured in hand.
Got it. Are there any recent examples that you could share? I mean, obviously, you don't need to give the exact company and the exact numbers, but sort of like I'm sure you are doing quotes and sort of talking to companies. And do you have any sort of more detailed specifics you could put in an example to kind of uh, illustrate what it might look like a getting
Yeah, of course.
started?
So,
We don't have to get on all the details, but just at a high level.
yeah, of course. So a client of mine or a prospect at the time last fall was, going from about 6 vehicles to about 50 vehicles.
Mhm.
And prior to doing that, they were with one of the carriers I had mentioned, going on a very, honestly closer to 5,000 per car per year
Got it.
price point. And, when you don't have much scale and you can't, another downfall of a lot of these more traditional insurance carriers is they're not going to rate per mile. They're not going to rate per
Mm,
trip. They're not going to change the the wheel at all here. They're not
got
going to
it.
reinvent the wheel. They're going to go ahead and apply their more traditional underwriting techniques
You've
to
got
your
one
non.
car. We kind of assume that you're using it all the time, and that's what we're going to
Right.
charge you for, right?
So
Which is probably
naturally,
not ideal when you're a startup.
yeah. So naturally, you're just overpaying just based on the
Mm,
pure, call it ignorance, I guess, if you will, of or stubbornness, maybe it might be a better word, of these traditional carriers. However, so in their growth efforts, they actually had partnered with a few different dealerships, had some excess in
mm,
inventory, brought on the inventory in exchange maybe for some equity. And as we developed their program with one of my carriers in our carrier group, we were able to not only change the rate to a weekly rental or a weekly non-rental or per mile rating basis, but we were also able to remove a lot of the redundancies that were
mm.
that were existing in their old policy, that
Yeah,
ultimately brought their cost per vehicle down to about $1,700 per car per year. That's again not the way we rate the policy, but if I were to
got it.
calculate it out using those kind of antiquated measures,
Uh,
that's roughly the ceiling that their insurance price will actually get to. So subject to claims, of course, which can
yeah.
always mess with premiums a little bit. Right now, the most they'll ever pay per month per car, or sorry, per year per car is $1,700. So we
Mm,
really managed to not only provide them a scalable platform to keep adding more fleet, talk to more dealerships,
yeah.
bring on more vehicles, but we gave them a very scalable, United States wide policy that can really, keep those costs in line
Yeah.
with expectations.
Yeah, and it's interesting that you share that example. I mentioned earlier, I talk to a lot of fleet owners, and I feel like I'm curious if you've seen this phenomenon. I'm kind of guessing it's true, but when we were first launching our rideshare insurance marketplace for personal, on the personal side, for Uber and Lyft drivers, we would see all these drivers, they'd go to their insurance agent, or they'd Google someone and find them and say, hey, I need rideshare insurance. And no disrespect to you, Ed, but I don't know if there's an insurance agent who's ever turned down a policy, right? And so they found something, they would make it work, and maybe it wasn't even the right product, or they would say that, hey, this may cover, right? It was sort of like people were, on the agent side, were kind of just finding something to fill, and it maybe wasn't necessarily the best fit. And I feel like that must be happening here too, quite frequently, because if you go to your average, broker for commercial insurance for new mobility, I'm assuming in the back of their head, they're like, what the hell are you talking about? But in the front of their head, like, I'm going to go figure this out. And, oh yeah, I can handle this. I'll get a quote from someone. I'll get a policy from someone. And it sounds like there's going to be a big delta between like someone like you who knows what they're doing and someone who's just getting any old policy off the shelf, right?
Yes, and you hit the nail on the head, and guilty as charged. The insurance industry certainly is filled with a lot of folks that are hungry to write new business, and they want to be successful brokers. And there are certainly some brokers out there that have told their clients, maybe at least passively, like, I'll learn this business as I work with you. And there are some industries that admittedly that might work with. I'm not going to say that people can't learn fast and apply that, but when it comes to the complex nature of ride sharing, of the gig economy, of fleet management, it's just really not a space where anybody can act like they know what they're doing. And it's twofold, because what I've run into a lot in my line of work, especially with other brokers involved, or when I'm up against another broker, is there are a lot of markets that will downright, and by markets I mean insurance carriers. There are a lot of carriers that are very savvy, very smart, insurtech, built for the shared economy, that will refuse to work with an insurance broker if they are not confident in their abilities. So oddly enough, it's an interesting piece of the industry where, quite frankly, the most reliable place sometimes you can go to hear about some of the best brokers would probably be the carriers you speak to that are focused on the shared economy niche.
Got it. And just to be clear, since this is my my second or third time talking insurance on the podcast, I feel like I'm a veteran now. But like I mentioned in my example, if I'm someone running a fleet of vehicles, renting them to Uber and Lyft drivers, I would go to someone like you, who's a broker, and you would go to an insurance carrier that's actually underwriting the policy, right?
Correct.
Okay, cool. Now, what I really wanted to bring you on, because I'm kind of excited about, is a lot of and it's really kind of like what I do in my business, on the gig worker side. We're helping them operate more profitably, save money, those types of things. And I feel like that's actually, like, you're sort of working with a lot of these folks to get them insurance and in these fleets, but I feel like you go above and beyond and are presenting them with interesting opportunities and, products and services that I don't know how much impact they're making on the bottom line, but I feel like they're definitely trending. So, I have a list here of things that I would kind of want to go over, but I guess at a high level, what's the most expensive part of getting insurance for a fleet owner, and how can, those companies keep the cost down?
Well, outside of premium, which I'm sure a lot of folks might focus on, it's a tough line item, and admittedly it is. I'll always say that what I bring to the table is the most competitive reflection of the market. But if we're talking generally about insurance costs, it's generally up there as one of the biggest pieces of it. But
when you say premium, what do you mean?
Premium, so your total cost of risk. So what you're spending to protect your vehicles and your drivers per year is generally going to be a top 3 to 5 line item. And it's not going to be, if you were to contrast it with another industry, just a brick and mortar retail shop, it's a level of insurance of pricing that a lot of startups can have some sticker shock with, even at the most competitive terms.
So you're saying it like the fleet, like all of your costs as a fleet owner, insurance is basically in the top 3 to 5 in the cost of goods type situation.
Right, and it's probably, candidly, one of the top one to two headaches that these folks might be going through as well.
Got it. So if we dial down one level and look at the premium, like why is that premium? Like what makes insurance so expensive for a fleet owner? Is it the liability? Is it the collision? Is the fact that, you're renting it to people who are, crazy Uber drivers? I'm curious, like what, if what is like driving that cost?
So a lot of aspects of risk management always come down to control. What can we control? With workers' compensation, it's where the slips and falls happening. Let's clean that floor up. Let's provide employee training to make sure that if they're going into that area, they're aware of all of these workplace ergonomics, call it.
Yeah.
So when you're talking about a line like automobile liability, especially in the context of renting a vehicle or letting someone drive their own vehicle, there's not a lot of control, even with the best risk management techniques available today. If you spent the whole bank on getting those all done, you're certainly going to see a significant dip in the claims that occur, but you're never going to remove them altogether. And that kind of goes back to why the market for the shared economy risks and new mobility are a little bit more limited than your standard commercial automobile markets, is because of that lack of control. When they're your employees and they're only driving to and from home, and they're driving on roads, by the way, that they know very well, that they drive every day, these patterns are very predictable. But when you have gig economy workers, maybe driving for delivery, maybe driving for Instacart, maybe driving for Uber Eats, or Uber, which generally a lot of them tend to diversify what they do every day. You've got a lot of situations that lie outside of traditional risk management control. So outside of the real claims data, which I will get to in a second, the cultural, misalignment here is the lack of control you can truly implement.
Yeah, that's interesting. So it sounds like you're sort of saying that like the gig model is kind of expensive when it comes to insurance for a lot of the reasons you outline.
Yeah, but it also comes down to the simple details. This is almost kind of feels like a broken wheel here with the kind of standard insurance jargon. But they're over the past 5-10 years, there've been any number of catastrophic claims. The general bucket of insurance has taken a pretty massive hit across the board, especially due to COVID. And then throwing into it automobile liability. When you think about the explosion of vehicles via Turo, via Fare, via hire car, via Uber, Lyft, since 10, 15 years ago, we have way more new cars on the road every single year than we ever have. And they're all driving in different parts of the city with people in their vehicles and driving new routes that they've likely never driven before, or quite frankly, don't have a pattern of driving through before, so don't feel quite comfortable. So
they're also incentivized. They're also incentivized, to drive as fast as possible, because the more trips you do in an hour, the more money you make. They're looking at their app a lot. So I never thought about it that way, but I totally see what you mean now.
Yeah. Well, we're just dialing it up a notch, and unfortunately, what's happened there is it's you got to throw in there, of course, a lot of the hurricane, the fire losses, and as well as a lot of the recent COVID situations with workers' compensation. These are all different lines of insurance, but these carriers all write the same. It's an aggregate system. One line does affect another in a certain way, and they use lines of insurance to subsidize others, which unfortunately in this day and age, we're looking at a very hard market in insurance, which means that prices are generally trending upwards. And so, really what that means is, it's got to hit an end at some point. And the best way to do that is, yes, your premium's one part of the conversation, but the next part about that is really, we were talking about vendors before, getting smart with your telematics, vehicle cameras in every car. Now is the time to really hamper down on your own risk management to make sure you can control your own premium costs as much as possible.
So that's a perfect segue, because some fleet owners are obviously, like any industry, some fleet owners are obviously doing this better than others. And I'm assuming that's reflected in their premium costs. So let's start with telematics, since you brought it up. If I'm a fleet owner, first of all, what is telematics, in the context of a fleet owner? And, how does that actually reduce my costs right now or potentially in the future? Or where's my ROI there if I install, that in every vehicle?
Of course. So I'll say to start, telematics are really any number of reports you can pull to let you know where your vehicles are, what they're doing, how fast are they driving, are they stopping aggressively, are they accelerating aggressively, are they making left turns too quickly? All of these details, while some of them might sound unimportant, are incredibly crucial to not only managing an accident but managing your drivers. A big aspect of managing a successful TNC or shared vehicle program is not just making sure the cars are operating efficiently. By the way, another part of telematics, making sure the car, oil levels are strong. We're not having any check engine lights turn on, but that you're also monitoring the actual drivers themselves. You set your standards. We mentioned, by the way, control earlier. The lack of control here. telematics is a new technology that's bringing into the view is some seriously strong control methods.
Yeah.
And a lot of the great stuff I've seen lately from some of my better carriers involves a dashboard that you can look at any given time to tell you what your drivers are doing. It even tells you if they're touching their phones too frequently. And I can say that if you're an operator in the space and you're running based off of a kind of a simple telematics platform that's based off your phone, then it might very well be worth looking into some of the better, value add services out there for telematics, because
what's
not
an
only
example of one or two companies or like specifics that are doing good telematics?
So as of late, one of the companies, I think one company that's in and of itself is Argyle. They're doing a very strong job, or better than most, I'd say, and really truly identifying the ride sharing periods for all involved. And in the gig economy, you can have any number of different companies involved in different periods for the same transaction. And navigating that is not usually a very easy process. And the way that manifests itself in a claim situation is time. You need to allocate a specific amount of extra time to figure out really where is the liability going to fall here. And in that situation, you get a lot of people pointing fingers. And when you have a technology that's able to isolate and determine immediately, what period of time that was, and consequentially what entity or operator is liable for that situation, you've just reduced the time of claim reporting and liability ownership significantly. And as a claim goes on, the general rule of thumb is the longer a claim is open and the more investigation involved, the more it costs
everyone. Yeah.
Naturally, lawyers are going to want to collect their paychecks on that as much as possible.
Yeah. And it's funny you mentioned Argyle, because we actually had Billy Marsden from Argyle on the podcast in episode 158. But the quick, I guess, explanation of what they do, I like to think of them as sort of like a plaid for the gig economy, right? You can kind of unlock your payroll data through them if you're an insurance company, for example. But because the gig economy provides so much data to their drivers, right? When you use Argyle, you're basically, like you said, right? It allows you to see, the timestamps and the periods and, kind of when and where, if they report an accident at 7:04 p.m., I'm assuming that you can kind of go back and check it. Is that sort of the gist? Like, I guess, put me in the shoes of a vehicle, a fleet owner. Why should I, add this Argyle to me, to my platform? And then how does it save me money kind of with the carriers? Is that something like carriers will say, hey, you've got Argyle, this is great? Or it's like, hey, that's part of the whole package. It's like, they've got Argyle, they've got, dash cams, they've got all these cool things. How does that work? Like actually getting fleet owners a discount if it does indeed do that?
Yeah, so generally there is generally a premium discount. It's considered a strong underwriting metric to have robust telematics. A lot of times carriers will ask for a example dashboard or an example like Excel file pull of what you can for each and every driver. And this kind of goes hand in hand. Mary, yes, for another good company. I think one recently that's impressed me is a company called Lytx. Because how do you
spell that?
LYTX.
LYTX, okay.
And why I've liked the services they've been providing is, again, I mentioned cameras earlier, and at this point in my career and in my practice group, I think I'd say that cameras, where 6 months ago I might say that's going a little above and beyond. Nowadays I'd say it's a very well worth it investment. And why I like Lytx is they actually marry their telematics in with the camera software option, which I think is very, very smart for a lot of owners to consider. Ultimately, going back to this control factor I mentioned before, because if there's anything I've noticed the most about, if I'm taking all my clients and throwing them together and looking at all the claims they've had, if there's one thing that sticks out a lot to me is that the driver's account of what happened might not exist. The driver might refuse to make a comment. It might be incorrect because, and this is, you've got someone who's been in an accident. People respond to accidents different ways. You never know how, again, their account at the time of the accident might not necessarily always be the most reliable source of information. And again, even if they're able to give that comment, which isn't always. My point of all this is when you've got strong telematics telling you where they were, how fast they were driving, when a collision was detected, and then on top of it, you've got a camera documenting the entire situation, there really isn't much of a comment you need from your driver. And that's ultimately the level of control that really not only gives you a premium discount when you're applying for the insurance, but is ultimately going to mean your claims dollars or less claims dollars are spent, and therefore less money is tacked on to your insurance at renewal, charging you for those claims.
Yeah, no, that's a good point. So it sounds like we've got a few good options. So Argyle, I think that makes a lot of sense. Some sort of, I guess, additional telematics component, right? That's tracking other things like what you mentioned, like how fast they're going, driving behavior, vehicle maintenance, whatever, if the red blinking light comes on basically, and then also dash cam. So those are three big ones in my mind. I guess before we move on to other, things that could be beneficial, I mean, are there any downsides or issues, to using this? I mean, I'm thinking from the driver's perspective, like, I assume if you ask a driver, do you want, a dash cam looking at you, telematics tracking you and all of these things, I'm assuming most drivers say no, but it does seem like it could be potentially, in their longer term interest, if it saves them money on, it saves the fleet owner money on insurance costs, and then they then pass that to the driver in the form of a lower weekly premium or weekly payment, right?
Yeah, it's funny you bring that up. That was the first impression when I started working with more clients that were incorporating this in. That was my first impression as well. I would not want a camera on me all day, especially not in LA traffic sometimes when maybe tempers flare a little bit. But generally they're placed behind the driver, and every account I've worked with that's implemented these, I haven't seen any noticeable dip in usage or renter activity. Where the numbers have really come in are just, again, on that claim side. It might feel a bit intrusive, but at the end of the day, it seems really like the total overall value of the vehicle you're renting is paramount.
Yeah. And I think I will say, we don't need to get into all the details of the telematics, but there are some pretty cool systems and features out there where you can really kind of I guess my advice there would be to sort of align some of the incentives with the drivers. For example, I remember we did this campaign with Ford, and I test drove a Ford, like a brand new Ford Focus hybrid. And it was really cool. They had this kind of cool little graphic where every time you would brake, they would give you a braking score. And so you would try, like for me, I would try to get to 100, just because, it was like kind of fun to get 100 braking score every time you came to a brake. And that was basically judging like, hey, you're doing a good job of slowly decelerating. And what that's doing, it's regenerating your battery, right? So you're now going to get a longer range, and you're going to get, better gas mileage, right? And so now as a driver, it's like, oh, okay, my boss wants me to brake smoother because that's probably better for, getting into less accidents. But that actually, is going to reduce my fuel costs every single week, right? So that's just like a small example.
Yeah, and I think that's a great point you bring up, because I think, what driver wouldn't be receptive to that, right? I think that those are cool aspects, and I think that's going to be part of this industry more and more as it evolves. These a lot of these technologies we're bringing up and discussing are pretty new. And so I think as these things develop, that driver feedback is going to be kind of the next ring of issues to tackle to really kind of marry everything together, in the interest of operating efficiently.
Yeah. I just feel that. Yeah, I just feel very strongly that, I guess from running my business for 7 years, there's so much variability. There are some really good drivers and there are some really bad drivers. And I think that fleet owners kind of want to do as much as they can to kind of highlight that disparity, right? Like you want to sort of show that I've got the top 10% of drivers. They're getting into, 4 to 5 times fewer accidents, right? Because that's actually what we've seen, maybe not so much on the accident side, because that's not my specialty, but, with earnings for drivers, there are literally, you can look at actual data, there are drivers earning 4 to 5 times more than other drivers in the same city. Obviously, they're doing very different things. So, okay, rant over. That's a different topic. But I just want to ask you, are there any other things that are kind of cool technologies or, helping to reduce the premiums, or maybe, maybe it's more of an investment for the future? I guess driver training comes to mind. That one could be kind of an interesting one. Is there anything else?
Well, driver training could be interesting, Harry, because that's an evolving subject, because at a certain, I'm not sure if we covered in the last one, AB5 has obviously been rolling out in different states and in California, and there was the exceptions made for, TNC operators, and, where the line is a little unclear at this moment, but I do know that, when you have a 1099 worker versus a W-2, the level of, let's just call it driver training,
Yeah.
the level of your involvement towards them, towards, curbing their behavior a little bit or improving their driving, I know it, has some triggers towards becoming a full-time employee. So, maybe an interesting topic as it to discuss as it evolves, because I think that's an interesting side of this business that hasn't kind of taken full hold yet. But outside the box there, some new technologies every day that I think, I'm starting to really enjoy some of these clients I've been working with that are providing, tap card services for, for local municipalities. So it's a, yes, it's a rideshare service, but it's kind of a reimagined bus transit system that maybe is a little bit, more, efficient for the municipalities to run, gets more people to and from work. You've got a lot of new operators these days focusing on, veterans, on education. It's really cool to see all the new directions these are going in, and consequently the technology that's going to be required to safely, move that forward is going to be equally as cool. So I'm very much so looking forward to seeing where that goes.
Very cool. Well, I have one more question on this topic. I got an email a few months ago from a fleet owner. I might have actually even forwarded it to you to help this guy out, but I just thought of it right now. And it was a fleet owner. He asked me, he said, my drivers, I'm paraphrasing, he said, my drivers are getting into way too many accidents. How can I kind of stop these claims from happening? How can I stop them before they happen, right? Do you have any advice or best practices for someone in that situation? I mean, we've talked about some of these tools that I assume, might help with some of that, but how do you kind of, like Argyle seems like a great tool after the fact, but what are some of the best tools before the accidents even happen, or to, reduce those accidents in the first place? Because like you said, right, like the claims are a big part of the eventual premium.
Right. And a lot of these are not one size fits all. Telematics is great, and telematics is one of the best way in cameras, one of the best ways you can act. But again, there's only so much you can do proactively there. I think the driver feedback gives you a lot of good tools to predict, if someone's speeding too much, if they have general characteristics. Again, these are just statistics. It doesn't necessarily tell you someone's going to get into an accident or not. I'd say at this point in time, there's just a lot of the measures aren't proactive, other than telematics, that really their interpretation can be forward looking. But when it comes down to it, I think the way to look at this is to actually, how can we, lower the cost of these losses when they happen? How can we drive them down as low as possible? And, physical damage is a big piece of this, because most of the accidents that happen in the space are fender benders, or scratches, stuff that costs generally less than $3,000, $4,000, so, a week in the body shop kind of a situation. And when those situations happen, it's important to have policies and procedures ready to go. That's why actually one of the recommendations I've been making a lot lately to fleet owners is, if you're going to lend your fleet out, if you're going to use your fleet for something else than sitting on the parking lot, one of the best ways to keep those cars on the road is to more or less go with the Southwest model, which of course is, make them all the same make and model, streamline the maintenance process, set up a, it doesn't necessarily, you don't necessarily need to purchase physical damage. No states require you to purchase it. It's just a cash flow mechanism. And so basically, would you rather be paid back for the claim right now, and then pay the insurance company at the end of the year for the claim? Or would you rather just take care of it yourself now? And the reason I bring this up is, again, there's no way to stop these accidents from happening. The best thing you can do is respond quickly. And what I've seen a lot of really great operators do is really, fine tune that maintenance process, set up very strong relationships with local body shops that work on that specific make, model, and car, so they can drill down that time of, the cars off the road. And it can also drill down that cost, unfortunately, due to the volume you're sending. But hey, I mean, that's a outlet I've seen a lot of operators have good success.
That's a good point. It's funny, when you were speaking, I was thinking to myself, like, man, they should invent some car that's just like, a little battering ram, right? That has kind of like a rubber, basically rubber right around the whole, the front. If most accidents are fender benders, right, and you kind of want to avoid some of that. But I like your solution. It's a little more elegant of, kind of finding a make or model that's easy to repair. You can get a local relationship with an auto body shop that, get a Toyota Camry in there, they turn it out in the same day and, increase your utilization. The one thing I will push back on is, knowing drivers, like I feel like there is a lot that you can actually do before claims can happen around, maybe it's on the telematics side, but, with the sort of just like maybe it's training, telematics, a combination. But I do feel like the drivers who are getting into accidents, right? Like I think there is quite a bit you could do, even for, just one example off the top of my head, right? If most accidents, I believe happen at night, Friday, Saturday night hours, if you have 100 drivers that are coming on the platform, and you only have cars for 20 of them, right? I would look at that as a filter. I would say, okay, what hours are you typically going to be driving, right? You don't want to force them into driving certain hours, right? Because then you get into that control issue. But if they say, hey, I want to drive during the day, I never want to drive nights, I never want to deal with pukers, and that also aligns with, lower insurance costs, and you're like, great, come on board, right? And I feel like a lot of fleet owners aren't really doing that. So if any fleet owners are listening and they want to experiment with me on a project like that, definitely reach out. But just my 2 cents, not knowing much about insurance.
I think it's a great comment too, Harry, because it's gotten to the point with a lot of these, insurance markets and carriers where they're starting to hear more of these arguments.
Yeah.
There's with some of my scooter clients, there's been a lot of talk around, well, why are we charging the same rate for the first ride someone's taking versus the 100th ride they're taking, exactly. Right? Because they're clearly a loyal customer. They clearly have been here for longer. They clearly know how to ride this scooter. There must be something there. And I like your comment because it especially highlights more or less the antiquated nature of insurance. It's coming around. It's slowly, all these things make perfect sense, right? But when you have an industry as old as insurance that goes by the book about everything, it takes some time to really chip away and get them open to these kind of new discussions.
Yeah. Cool. Well, I really appreciate this discussion today. And if folks are interested in chatting with you, learning from you, what should they do? Where can they follow you, find you, and reach out?
You can find me on LinkedIn pretty easily, just Edward Walker. And then, of course, if anyone would like to shoot me a note, it's just edward.walker@usi.com. I'm happy to always answer any questions, whether it's a fleet owner, a TNC company, or you're just a driver looking for some answers. I'm always happy to take the call.
Yeah. And feel free, if anyone has my email and wants an intro, I can also intro that to make it easy, intro you to Ed to make it easy, whatever works. But yeah, no, I really do appreciate you, Ed, for coming on. And also I do feel like for a lot of the readers and, especially industry folks out there that follow our work, and when they have insurance questions, I usually send them your way, and you're always very responsive. So I feel like that passes good karma back on to me. So, and I'm not doing much. So I appreciate that, Ed. And did we cover everything you wanted to cover? Anything else we missed?
I think we've just, I think there was one topic we might have brazed over a little bit that might be, if we've still got some time here, I'd love to throw in. It's just something
I've got some time, and we're still recording, Ed. So feel free. I'll let you have the last word.
Yeah, no, it's it's really, I could have guessed this when I first started developing my practice group back in 2018. Harry and I have touched on how there's a pretty wide spectrum of brokers in the space, very few of them knowing very much about this industry. And I would encourage, of course, all operators to really vet the insurance broker you're speaking to before you really go ahead and move forward. But the important side aspect I really wanted to bring up on this, especially recently, is I've had a few new clients come on board, and I don't generally like to ever disparage any of the prior work they've done, because a lot of time, quite frankly, it's not their fault. They're just doing their best effort to find the best insurance in front of them. Right. What I've seen a lot of lately is a lot of the fine print coming back to bite a lot of operators after the fact. And what I mean by that is just maybe just to give a word of warning to everybody who's thinking about doing something with their fleet or going the TNC route, DNC, you name it. Just a word of warning that there are a lot of carriers out there that, while they will provide you with, what seems to be a very cost competitive front page of their quotes, a lot of times, if you go a little bit deeper into the language, you're going to find, some rate redundancies. You're going to find a lot of charges for time you're not using the vehicle. And when you add all those costs up, it might be a much drastically different figure than you initially anticipated. And very recently, I've flagged a few of these as being borderline egregious. We're talking about deltas of over 80% versus what I was able to provide. And I don't say that to brag. I say that as a word of warning that there really are carriers and insurance folks out there that might not even know what they're giving you. And just to make sure that you review the details, because the devil is in there, and sometimes it can really manifest itself into some seriously egregious insurance pricing. And just to keep an eye out for that, because it does exist.
Yeah, no, that is a good point, because I know a few fleet owners and operators that I've connected with you, and I think that exact situation is what happened. And that's sort of what I've told people on the insurance side all along, even on, kind of going all the way back to personal insurance for Uber and Lyft drivers. Like, I don't know what it is about insurance, but like you can get a quote with 2 different companies and it's like 80% different, 40% different for the exact same person, the exact same type of coverage. And it seems like, that applies for sure on the commercial level, and may even be more magnified, and definitely more dollars in absolute terms. So we appreciate what you're doing, Ed, and keep on keeping everyone informed and serving all of our readers, really, and listeners. I appreciate it, Ed. Take care.
Of course, appreciate it, Harry. Thank you.